In a recent column, I talked about rate reset preferred shares and how a lot of them will be cutting their dividends, much to the surprise of people who bought these things thinking they were safe. Now, rate resets became popular during the financial crisis as a way for banks to raise money, and they've since spread to other sectors, including telecoms, insurers, utilities, and pipelines. Today, I want to take a look at an actual rate reset preferred share that reduced its dividend just the other day, so you can see how brutal the math can be. The company we'll focus on is Bank of Nova Scotia, and the security is the 5-year rate reset preferred share Series 30, which has the ticker symbol BNS.PR.Y. Back in 2010, BNS.PR.Y was issued at $25, and it paid a dividend of 96.25 cents on an annual basis. That works out to a yield of 3.85%. The yield at the time, and every 5 years thereafter on the reset date, was set at 1 percentage point above the 5-year Government of Canada bond yield. This is what's called the spread. At the time, the 5-year Canada bond yielded 2.85%. So if you add that 1 percentage point spread, that's how Scotiabank came up with the 3.85% yield on the preferred share. But let's look at what's happened to the 5-year Canada bond yield over the last 5 years. It's plunged to well under 1%. That means the dividend on BNS.PR.Y also had to fall, a lot. For the purposes of resetting the dividend, Scotia used a 5-year bond yield of just 0.82%. So if you add the 1 percentage point spread, the preferred share yield drops to a measly 1.82%. In dollar terms, the dividend plunged to just 45.5 cents annually from the original 96.25 cents. That's a cut of more than 50%. For reset purposes, the yield is calculated by dividing the annual dividend by the preferred share's par value of $25. But as you can see from the following chart, the preferred share isn't actually trading anywhere close to its par value today. In fact, it's dropped more than 12% since it was issued. Now, the true yield, based on the share's market price, is a little over 2%. So investors have actually been hurt two ways. Their dividend's been cut in half, and they've lost on the share price as well. Now, there are other factors at work here, but the bottom line is this: rate reset preferreds have turned out to be a lot riskier than many people thought.